Allied Blenders. Of course, this is the company, as you know, the one that makes Officer's Choice whiskey, listed at a 14% premium to its issue price, currently close to around 315 rupees per share. So to understand the company's plans going ahead, we are now joined by Alok Gupta, the managing director at the company itself. Remember, the company had joined us at the opening of the IPO as well, spoken about their growth plans going forward, improvement in margins, etc. as well. So now let's further that conversation with a few more details. Thanks a lot, Mr. Gupta, for joining in, and congratulations on the listing. It's a momentous day for your company, your employees, and all the shareholders as well. The last time you joined us, you did say that you're looking at around 5,000 to 5,500 crores in terms of revenues with mid-teens margins over the next 2 to 3 years. At the price that the company is currently trading at, you know, the street expects around 3,700 crores in terms of revenue and 350 crores in terms of EBITDA for FY25. Is that a possibility?
Well, most certainly. I think, first of all, thank you so much for inviting me and for all your good wishes, and certainly a possibility. I think the plan that we put for FY25 on back of a higher P&A growth and significant oversight on cost, we should be looking at gross margin expansion, and that all flows down to a better EBITDA profile. And as we discussed last time, the objective of the issue is to pay off the debt. So we see that happening immediately with significant reduction in our interest costs, therefore a better profit margin as well. So we are on track.
So you're on track for what number? 3,750 crores on the top line and 350 crores for the EBITDA? Can you better that? If yes, by how much?
Sorry, I'm having a little difficulty. If you don't mind repeating the question, please.
Yeah, so what we're trying to get at is 3,750 crores in terms of revenue and 350 crores in terms of EBITDA for FY25. You say that's pretty much on the cards. Can you better that? By how much, if at all?
Well, for now, I would say the plan is to better that. By how much, hopefully, we'll get to know over the next few quarters. But I think we have a solid plan in place, so we should look at the numbers that you've just spoken about.
All right, EBITDA at around 350 crores. We'll hold you to that number. Well, Mr. Gupta, congratulations and wishing you all the best as you list on the stock exchanges. It's a Tuesday morning and it's a rarity that we're already talking about whiskey, but that's the case. So let's get through some numbers then. On the volume front, what kind of volume growth are you factoring in for the next 3 years or so? And more importantly, will you outgrow the industry? If yes, by how much?
Sure, thank you for that. I think like we spoke last time, we are looking at the entire segment broken up into what we call as mass premium, where we have leadership through Officer's Choice as a brand, and the P&A segment, where we have 3 solid brands in terms of OC Blue, Iconic White, and Sterling Reserve. And we also spoke about the luxury segment. Going forward, the focus on the mass premium segment is going to be a single-digit growth, but profitable growth. Hold on to our gross margins, which are already trading north of 40%. In the P&A segment, with these 3 brands, we have a solid position, and we'd like to expand our market share in the P&A whiskey. But a lot of focus and excitement is going to be in terms of the new brands, especially on the premium and luxury side. We launched our small batch in Zoya just in January. So getting on to your question, I think the way to look at growth is that the volume growth we are looking at early teens, but the value growth in terms of revenue growth, we are looking at mid-teens, and that will lead to a better profile of sales and therefore a better gross margin and EBITDA.
All right, P&A segment is how much of your total mix? And how much will it contribute in the next few years?
Well, the mix has been steadily improving. So from a 25% share of P&A, we are already north of 50% in value terms. And we expect that to continue growing at least 10-15% year on year. So hopefully 3 years down the line, we are looking at a mix anything between 75 to 80% coming from the P&A.
75 to 80% coming in from the P&A. That would be interesting. So how about premium beyond prestige and above? Because, you know, P&A is now suddenly becoming a lot more commoditized given the price hikes that people are seeing with the general trend in premiumization. So what is the kind of revenue that you expect coming in from the high-end luxury premium segment? Where does that number stand at right now? And where does that go, say, at the same time when P&A is 75 to 80% of your revenues?
Well, currently the segment is small. We do about 300,000 cases in the premium and luxury segment. The segment is about 12-13 million cases, growing at a decent growth rate of 20%. So the way we are looking at is we plan to launch about 4 or 5 brands in the segment. And over a period of next few years, if we can get to a high single digit or a double digit share of this 20% growth segment, which has a base of 12 million, that will be a good number for us to arrive at.
Okay, all right. Mr. Gupta, let's talk about a couple of states then. In Telangana, there's been talk of some price hikes. Has your MRP gone up? If yes, by how much? Point number one. And there is also talk about a liquor ban, alcohol ban in Odisha. Do you have any exposure to Odisha? So give us some clarity on both these fronts, Telangana hikes and any exposure to Odisha.
Well, we do trade in Odisha. We've all read the news article. But what we hear from more credible quarters of the policymaker, I think we do not expect any change. If at all, there may be some discussion on country liquor. But again, I would say it's a bit of speculation because the statement was made by one individual, but the government is sort of the view that this needs to be retaining status quo on Odisha as a market. In Telangana, there was a price increase last year. So in our view, while there may be some conversation about price increase, which will be more than welcome, but we have not factored any price increase into our, for the financial year FY25 into our plans. If that comes through, we'll be more than delighted, but we expect that to happen early next year.
All right, so don't expect, and if you get it, well, cheers to that. We'll keep an eye out on that front. What about in Odisha? You're not expecting any change, but what is your current exposure to Odisha?
We do not expect any change in Odisha.
That's correct. But what is your exposure, sir?
In terms of, you mean in terms of rupee crores? That number,
Yes.
honestly, is not on my fingertip. That number is not honestly on my fingertip, but I can give you a range-bound number. It would be maybe to the tune of about sub 20 crores could be our exposure.
Oh, very
All right, sub 20 crores. So no real worries out there. And final question then from our end. What about the overall target? You've given us this 5,500 crore revenue target by the next 3 years or so. Number of cases, if you could break that down in terms of product mix, margins, market share. Give us the overall vision board for the company as it stands.
So we're looking at doing about 36 odd million cases this financial year and compound that by about double-digit growth over the next 3 years. So we're looking at, hopefully close to 45, 50 million cases a couple of years down the line. From a P&A segment, like I said, the focus is going to be on P&A. Therefore, we see the value share of P&A and premium and luxury to be north of 75%. Gross margins are currently at about 39%. We should see about 200 to 300 basis point increase in the gross margin. We did talk about the fact that we're looking at going captive on ENA. Currently, 30% of the ENA that we consume is our own, 70% is bought. We're looking at 100% captive. That should have impact of another 200 to 300 basis point on the EBITDA. So, I mean, the single point that we're chasing currently is to get to industry parity EBITDA, which is in mid-teens. So, on back of a better product portfolio, gross margin expansion and backward integration, we're reasonably confident that we'll get there.
All right. Thank you so much for joining in, Mr. Gupta, and wish you good luck once again for all your life post-listing now that the street is eyeing every quarter, literally and figuratively. We'll keep coming back to you and, checking on whether you are on path to that vision board that you have. Nearly 5,500 crores in terms of revenue, 36 million cases, higher share coming in from P&A with mid-teens margins. Once again, good luck from all of us out here. Take a short break, come back. On the other side, we have the management of Atul Auto joining in. Jitendra Adya, who's the President of Finance, joins in to discuss their June auto sales.